Good morning, everyone. Good morning. Hope you guys are doing well. Today is Thursday, July the 30th. Yesterday was a fairly volatile day, of course, with FOMC statement at 2:30. We had an initial spike in the markets, but as you can see, we ended up selling off into close. And then, of course, we did have some major earnings in the after hours with Microsoft and Meta. Microsoft currently up roughly 10% coming into market open, gapping up here up into that 430. Meta is one that's actually down roughly 10%. So Meta down 10%, Microsoft up 10% coming into today. We do have quite a bit of things to talk about coming to market open with, of course, some more red folder news right in the morning, and then we do, of course, have Apple and Amazon earnings in the after hours. So, with that being said, there's quite a few things to talk about before we head on to the charts. What's up, everyone? Good morning. What's up, Calvin, J10, B Roots, Alejandro? Good morning, P1, Maria. What's up, everyone? Lamit, Cody. What's up, Carl, Gerald? Good morning, Juan, Leon, Cinna, Wallace, Kevin, Robert, Jose. What's up, Deuce? Julius, Cosmic. What's up, Andy, Sam, David, and what's up, everyone? Yeah, hope you guys are doing well. Good morning. Before we head onto the charts, let me pull up the economic calendar here. As I mentioned, there are a couple things to talk about today. We do have some red folder news right in the morning. So as you can see right here, we do have the advanced GDP that is going to be at 8:30 a.m. Eastern Standard Time, core PCE price index, along with the unemployment claims. So a decent amount of things right at 8:30. We'll go over some charts and then we'll wait for 8:30 to check out the advanced GDP along with the unemployment claims. And then we'll kind of develop our game plan from there. For tomorrow, unemployment costs at 8:30, and then at 10 a.m. we do have the revised consumer sentiment as well. If we go into the earnings calendar, yesterday we had quite a bit of things, as I mentioned. Microsoft and Meta were the big ones. We had Robinhood as well, and then we had ARM along with Qualcomm. Today we do have Apple along with Amazon. Those are the major ones. A couple other notable ones: Reddit, AXTI in the after hours. So a couple more major earnings coming into today. Apple's been the leader towards the upside, and then Amazon has been beaten down quite a bit. So there's a couple more earnings names to keep an eye out for. With that being said, let's take a look at the Qs and the overall markets here on the higher time frames. We talked about the potential break last week, breaking underneath our key technical level support on Friday. You can see so far this week we are having a sell-off towards the downside once we were able to break underneath our 690 here on the higher time frames. If I pull up the EMAs as well, now as you can see, we're flipping underneath the 9 and 21. We broke underneath that key technical level support that I mentioned. That's why we're seeing this sell-off towards the downside. Based off the higher time frames here for the Qs, there's really not too many key levels of support. What we have here is just a couple down close candles. The real level of support is actually all the way back down in towards that 630 on the higher time frames. If you go on to the NQ, we actually are gravitating back down in towards that previous all-time highs, right? With the contracts being adjusted here, you can see the NQ is now approaching this previous level of resistance. Now we like to see this area turn into potential support. So we are at a key level support, more so on the NQ with the contracts adjusted. For the actual QQQ, there is a little bit more room, which is a lot further away actually. So far, we are seeing some nice buyers that are stepping in right off a key technical level. We'll see if we can have a potential mean reversion back towards the upside into the area that we broke down from. This would be the next logical area for the NQ for potential lower high as well. So I would like to see a potential lower high be built now on the daily chart for a move back down in towards that previous all-time highs and below. If you go back into the Qs, Coming into market open, what do we have marked out at least for today? Let's go on to the lower time frames. The levels that we're going to have marked out is just going to be our previous day highs, which as you can see, we have multiple touches here as well. The next levels that we have marked out is going to be that 688, which happens to be our high, or sorry, the low that we created here on Tuesday. And then we have our previous day low marked out as well. So right now, as you can see, we are in between its previous day's range. Yesterday, we did quite a bit. Right, we ended up rejecting off our key technical level right off the bat, 678. We got underneath our previous day lows, nice retest towards the downside, reclaimed it coming into FOMC, ended up pushing all the way back up in towards that previous day highs, rejected, and all the way back down in towards our previous day lows, 660. And currently now, as you can see, we are bouncing and we're in between its previous day's range. So coming into market open, at least right off the bat, we're going to keep an eye on the reaction that we have off this 680, or sorry, 668 on the QQQ. If we do want to see some upside today, what I'd like to see is maintain above that 668, hold for a potential flip back up in towards our previous day highs. Really, this is the only long scenario that I have. Of course, if we got above our previous day highs, that would also be a sign that we're fairly bullish here in the markets for a potential continuation higher. So these are the two scenarios that we have for the upside coming into market open. If we do want to see some downside on the Qs underneath our 668, hold underneath, we can see a flip down in towards our previous day lows, which is at 662 here on the higher time frame. So underneath 668, room all the way down in towards that 662. So those are the key technical levels that we have coming into market open here. On the Qs, with us being inside the middle of the range, we're going to keep an eye out on this key technical level, and we're going to see the reaction that we have off this level as well. If you took a look at the NQ, as I mentioned, we are seeing some buyers here off that previous all-time highs. Now, what I will have marked out on the NQ is just going to be that previous day lows. So we have this marked out. So we actually have a couple key levels marked out. We can mark out this. Other levels that we have marked out is our 27,700, which is our key technical level. So coming into market open here, you can see in the after hours, you end up having a push towards the downside. In the pre-market so far, we are seeing a little bit of buyers coming into market open. Right now, we are in between its previous day's range. Key level today is just going to be that 27,700. Maintain above this level, we can see a flip back up and towards that previous day highs. If we do get back underneath that 27,700, we can see a flip down in towards our pre-market lows and potentially our previous day lows as well on the NQ. If we go into the SPY chart, this one, let's go on to the daily time frame. As you can see here for the SPY, as of recent, we are breaking underneath that 740. This is technically our first strong daily candle close towards the downside here on the SPY chart. We had this period of consolidation, and now we're breaking underneath, and you can see we're back into this previous level of resistance. That is potentially, previous level of support, now potentially turning into resistance. So key levels for the SPY, we're just going to mark out this 736. You can see yesterday it came down. We actually broke underneath it, reclaimed coming into FOMC, and ended up closing fairly weak on the day. Coming into today, we're going to keep an eye on that 736, a rejection of this level. We can see this lower high be built on the hourly time frame for a continuation lower. If we do reclaim back above, we could see a potential mean reversion in this V-shaped recovery. This is a little bit less likely to happen, but that is a possible scenario on the SPY. So the exact level, 736 coming to market open. Other levels that I have marked out coming into today here as well is going to be that previous day lows, which is all the way back down in towards our 730. So coming to market open here for the SPY, just keep an eye on that 736, a reclaim back above hold. As I mentioned, we could see this flip back up in towards that 740. If we do reject off this area, that is going to be a sign for a push down in towards that previous day lows, our pre-market lows and potentially all the way back down in towards our 730 here if we do have a strong rejection off the 736. But with that being said, we are in between its previous day's range. We do want to be a little bit more cautious coming into market open here on the SPY. Let me actually just make this a little bit bigger for you guys as well. So that's what I have for the SPY in Qs coming into market open. Let's take a look at the SMH here now as well, along with a couple other names. Now, if you guys do have any charts or any tickers you'd like me to go over, we'll go over them until 8:30, and then we'll develop our game plan after we have some red folder news. So if you guys do have any charts or any tickers you'd like me to go over, you guys can now drop them in the chat. If you guys are enjoying this so far, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below as well. Okay, let's take a look at the SMH here, which is the semiconductor ETF. You can see this one is a lot weaker as of recent. Underneath the 9 and 21, lower highs are being built on the daily. And we also broke back underneath this level last week, which is 580. You can see a pretty big sell-off towards the downside, back down in towards our 500 here on the higher time frames. For the SMH, it's going to be fairly difficult if you want to see some upside. We're going to have to reclaim back above key technical levels at a minimum, back above this 540 and preferably above this 580 to break structure back towards the upside. If we go into the semiconductors, the key levels that we have marked out coming into today, as I mentioned, what we have is this 540. That's roughly our previous day highs. So we have this level marked out, previous day highs, and then other levels that we have marked out as well is going to be that previous day lows. Coming into market open for the semis, we can also mark out that low that we created here on Tuesday. What I'd like to see for some upside, the hold of our Tuesday's lows for a potential flip back up in towards that previous day highs is in play coming into market open. If we do get underneath that 520, we could see a move back down in towards that previous day close, along with their previous day lows 508 and below. So that's what we have for the semiconductors. If we're looking at the IWM, this one is recently breaking outside of the range here on the daily chart on the IWM. The key technical levels that we have marked out is this like 292 general area. You can see we did close underneath. On the weekly time frame, we still have not closed, so we very much well could just kind of bounce in this weekly time frame, flip back bullish, and we continue back towards the upside. But coming to market open here on the IWM, what I would like to see is the reaction that we have off this key level here on the higher time frame. So what we have marked out is going to be that 290. If you want to see any sort of upside here on the IWM, hold above this 290 for a flip back up in towards our previous day highs and above. If we do reject, get underneath that 290, not going to be a good sign, and we can see this push down in towards that previous day lows and below here on the IWM. So this is what we can have marked out. And now with that being said, let's head on to some tech names that we have coming into market open, starting off with Tesla, and then we'll make our way down and head on to a couple other names as well. Okay, with that being said, let's head on to Tesla first. This one is still weak here on the higher time frames. Are we going to see a price appreciation SNDK into running into earnings? We'll talk about SNDK here. A lot of the semis have been beaten down quite a bit. As for something like Tesla, once we ended up gapping down with earnings, every single day has been bearish so far. We've just been continuing towards the downside. Every pop has been shorted here, of course. Key technical levels on Tesla. One of the major levels that we have marked out is our 308. Other levels that we have marked out as well. We're going to mark out that low that we created, which is our 300. And then we can mark out even our after hours low. So we broke underneath our 300 yesterday. and we had a pretty big push down in towards that 294. Now we're reclaiming back above 300. What I would like to see coming into really this morning here on Tesla is going to be the hold of 300, potential bounce play for a move back up in towards that 308. That's going to be key. Another possible scenario above that 308 hold for a push up in towards that 310 and above. So for Tesla, basically our 300 bounce for a move back up and towards that previous day highs or above our previous day highs, we can see a flip back towards the upside as well. Tesla is technically still in a downtrend here, so every lower high, as you can see, is being shorted. Underneath that 300, we can just see a flip right back down in towards that previous day lows and below. So keep an eye out on that 300 key psych coming into market open. As for AMD, this one had a recent pullback as well, broken outside of its consolidation. AMD continued to show weakness. We are back down into a key technical level support, which is really the area that we bounced from earlier into the year off of our 430. Right now, what we like to see is any sort of buyer step in off for 430. If not, we're going to head all the way back down in towards that huge gap fill here. So for AMD, the key levels that we have marked out is going to be our previous day lows. Other levels that we have marked out as well is going to be that 440 and our previous day highs. So for AMD, the key technical levels that we have marked out, 445 coming to market open along with that previous day highs. Above our previous day highs, we can see this flip back up in towards our 470. If you want to see another possible bounce, offer 445 for continuation back towards the upside. Of course, if you get underneath our 440, we can see a flip back down in towards that 430 here on the higher time frame. So this is what we have for AMD coming into market open here. 440 is going to be the key technical level. A lot of these ones are underneath our previous day highs, so we like to see them back above our previous day highs if you want to see any sort of continuation back towards the upside. Just because as of late we are in a downtrend, so if we push up and towards that previous day highs, we very much well can reject and continue back towards the downside, right? Something like AMD, we could come up into that previous day highs, reject, and see a push all the way back down in towards the lows. Qs, right? It's already fairly weak, right? A lot of these ones could come up into that previous day highs area, reject, and see a push all the way back towards the downside. As for Nvidia, this one, let's take a look at this one on the daily time frame. We rejected off that 212, and now we're actually back down into that previous area where we bounced from earlier into the year, offer 192, and now we're back down really at this key level support here. So for Nvidia, the key technical levels that I have marked out is basically just right here, this 190. You can see some buyers are stepping in off our 190, and we're seeing a little bit of a mean reversion coming into market open. As for Nvidia, the levels that I have marked out, let's just kind of readjust this just a little bit. We have our previous day lows, 190, and then we also now have our previous day highs, which is our 196. So for Nvidia, if we do want to see some upside coming to market open, bounce off our 192 or now above our previous day highs for any sort of continuation towards the upside. If you do want to see a potential move lower, we would like to see it underneath that 192. If we can get underneath that 192, then we can see a flip for a push down in towards that 190 and below. As for Apple, this one, of course, does have earnings today. We end up having a nice hold of that 339, push up in towards that all-time highs here on Apple. A little bit of a sell-off, and now we're pushing back towards the downside, pushing a little bit towards the downside, coming into earnings. Key level is going to be that previous all-time highs. You like to see this level hold for a bounce back up in towards that all-time highs here on Apple. Google, this one is consolidating as of recent. We did end up having a nice push above our previous day highs. You can see Google, once we broke back above that previous day highs, really saw a push, of course, with Fomc. We end up closing fairly weak, but for Google, key levels mark out that 334, reclaim back above, potential flip back up in towards our pre-market highs and above. As for Microsoft, this one does have earnings, and as you can see, pretty solid gap up, right? Daily higher lows are being built on Microsoft, and now we're pushing back towards the highs. we end up having a pretty solid bounce once again, right off our key level of support. You can see how many times we bounce off this area. Now we're pushing back towards the upside here. What I would like to see now in Microsoft is a break back above this 430. So the key technical levels that I have marked out is really this 430 on the higher time frames. This is the area that we got or we rejected from multiple times previously earlier in May and April. Broke above it, but once we broke back underneath, we end up flipping back below. So once again, with this earnings gap up, we're going to keep an eye on this 430. If you want to see some upside above our 430, hold for a continuation. If we reject off this level, you could see a potential earnings reversal back towards the lows. So the exact level I have marked out coming into today, keep an eye on that 430, multiple touches in the pre-market along with the after hours. For Microsoft, above our pre-market highs today for a push higher. That would be a little bit more difficult, especially with the elevated IV. You really want to see some sort of potential pullback within the first couple of minutes. IV flush for a push up in towards our pre-market highs and above. As for Meta, this one is doing the complete opposite. Pretty weak on the higher time frames. We actually are back down into a key technical level of support, which is the bounce that we had earlier from April. If we're looking at this from a weekly time frame perspective as well, as for Meta, we are now trying to break underneath this weekly higher low that is being built. So as you can see, we have kind of higher lows being built. We kind of had this downtrend forming as well. Now for Meta, we actually are gapping down here into a key technical level of support. If we break underneath that 530, next level is going to be all the way down and towards 480 here on Meta. So this one, fairly weak reaction after earnings. Key technical levels that we have marked out is our 520. Now, if you don't see any sort of buyer step in, the next level underneath that 520 is going to be our 500 and below here on Meta. So keep an eye on Meta underneath 530 coming into market open here today. If, as I mentioned, underneath that 530, continuation down in towards 500. Most of the times we do end up heading lower after the first initial day, right? Something like Tesla. We could see a mini bounce on Meta today. Not really interested in a mean reversion. A potential mini bounce back up in towards 550 if we do defend that higher time frame level of support. As for Amazon, this one has earnings in the after hours today. Key technical level is our 225 that we're bouncing currently off of. Some buyers are stepping in right before earnings. What we're going to keep an eye out for today is going to be that previous day highs. This one's actually showing some decent price action here in the pre-market. We're above our previous day highs, so key technical level. Keep an eye on that 231. Hold above that 231 for a continuation back up and towards our 235 and above. And then for Netflix, key levels that we have marked out is going to be that 75.50. If you do want to see some upside, right, potential bounce play off our previous day lows, are now above our previous day highs for continuation. As for SpaceX, key technical levels that we have marked out, SpaceX, we are finally seeing a little bit, just the smallest amount of buyers here, not by a lot. You can see the daily time frame is still very much in a downtrend. We haven't even broke structure on the daily chart as well, or looking at this on a bar by bar count. So for SpaceX, key levels is just going to be that previous day highs. If you want to see any sort of continuation higher, needed above our 118 for a flip back towards the upside. You don't want to see it come up, reject, and head right back down in towards that 111 here on SpaceX. So with that being said, we do have some red folder news in roughly 20 seconds. We'll wait for that. If you guys do have any charts or any tickers here, we'll go over the red folder news and then we'll develop our game plan and take a look at a few more tickers after 8:30. So if you guys do have any, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like and sub. See if we can get to 200 likes. And of course, if you haven't joined the free daily watch list, that is in the description below as well. Okay, so we just had some red folder news. As you can see, a little bit of reaction, nothing too crazy compared to yesterday's volatility that we had after FOMC. But currently this morning, we just had some numbers that came out. Advanced GDP, as you can see, forecasted 2.1%, actual 1.5%. So pretty came in a lot lower than expectations. Core PC price index 0.2, actual was 0.1. As for the unemployment claims, 201 basically came in line with expectations, 197. And if we're taking a look at the advanced GDP price index, this one is still loading as of yet. Let's see if the numbers came in. We can take a look at that here in a second. But the overall markets right now, not too much of a reaction compared to yesterday's volatility. You can see with FOMC yesterday, we moved up almost 1.6%. Or sorry, 1.3%, and then we end up dropping over 3% with all in the span of an hour and 30 minutes. So we did quite a bit yesterday on the SPY and Qs after FOMC. Coming into market open here today, I am going to be a little bit more patient with us just being inside of its previous day's range. But what I'm going to keep an eye out for is more so this like higher time frame potential break and retest back towards the downside. As for the Qs, kind of similar thing. If we can get back underneath the 670, then we can look for this flip back down in towards that 664. I already talked about the game plan. If buyers do want to step in, we can look for this higher low being built off our 668 for a potential pushback towards the upside. That being said, let me take a look at some other tech names that we have marked out. Palantir, this one, starting to show a little bit more weakness. If we can break back underneath this level of support, we can see this next leg towards the downside here. MU, this one, showing a lot more weakness. This is the one that was holding up nicely. But with the past couple of days, we are pushing towards the downside here on MU. Key levels that we have marked out is our number one, this daily gap. And then the next levels is actually all the way back down in towards this key technical level support. So the levels I have drawn out is the area that we just broke down from. And then we can mark out a couple other levels as well. So yesterday, once we broke underneath that 820, you can see this one stayed pretty heavy compared to the rest of the key, compared to the rest of the names, which had a bounce. MU stayed pretty heavy. Levels that I have marked out is going to be that previous day lows. If you want to maintain upside, bounce above our previous day lows for a continuation higher, sorry. Underneath our previous day lows, we can see a push down in towards that pre-market lows and below. SNDK, this one is officially now a lot weaker. If we're looking at this one more so on the higher time frames, you can see off the all-time highs, we're down roughly 57%. So fairly big retracement on names like SNDK. Now we're almost all the way back in towards that 1,000 key psych and our 800. We could see a little bit of a mean reversion, but SNDK now is definitely a lot weaker. Same with INTC and the rest of the tickers. Once INTC broke back underneath that 100, pushed towards the downside, we are at this daily gap. So we'll see if we can see any sort of buyers that step in here. But for INTC and the rest of the semis, they're now in a downtrend. So with us being in a downtrend, don't expect us to have like a V-shaped recovery and head towards all-time highs. It's very unrealistic. We can see a couple bounces back towards the upside, up and towards our 100 key psych. But for names like this and like MRVL, a lot of these ones are a lot weaker. So now on the daily time frame, we're breaking structure. The weekly time frame, if we're looking at this, we're breaking structure as well. So a lot of it now, we can see a mini mean reversion bounce, but don't expect a full-blown reversal right back up in towards our all-time highs, right? So for INTC and a couple of these names, we can see a move back up in towards right 92 and potentially like our 100 key psych, which is just our earnings low. But for something like INTC, keep an eye on that earnings gap. Let's see if we can get some sort of mini bounce back up in towards our 100, and then we can see a potential right lower high be built for a push lower. WDC, key levels off support. We like to see that mini bounce back up and towards that 560. SK Hynix, this one dropping as well. Key technical levels that we have marked out is going to be that previous day highs. Other levels that we have marked out is going to be that previous day lows as well. So for previous day lows, we have our key technical levels marked out. Let's keep an eye on the bounce play here off our previous day lows for pushback towards the upside. Key levels that we have marked, a couple other names, NBIS. A lot of these ones are pulling back. NBIS into a key technical level support. Keep an eye on the bounce off that 140. This is a good spot for a bounce play here on NBIS for a move back towards the upside. MRVL, these ones are showing a lot more weakness. Let's see if we can get any sort of buyers to step in for potential mini mean reversion back towards the highs. We would like to see the reclaim. So we're undercutting, we're reclaiming now. If you want to see any sort of push higher above our previous day highs for a potential flip back up in towards that 185. Hood had some earnings yesterday, fairly neutral reaction. We like to see it back above that 95 for any sort of continuation towards the upside. If we're on the hourly time frame, key technical levels 95 above it, continuation towards the upside. Rejection, we can see a push right back down in towards our 88 and below here on Hood. All right, with that being said, let's go over the game plan coming to market open, and then we will get ready for market open. So for today, as I mentioned, just keep an eye on the Qs off our 670. As for the SPY, the key technical levels that we have marked out, 736 coming into market open. And then for the semiconductors, this one's bouncing a little bit nicer here in the pre-market, showing a little bit of strength. Let's look for a potential flip back up and towards that previous day highs. As for my main watches coming into market open here, Tesla, we can keep an eye on that previous day highs rejection along with that 302. I do like AMD. This one's a little bit more stronger. Let's keep it on that previous day highs, potential retest for a continuation. If we reject, then we can be looking for a mean reversion back towards the downside. So main watches, Tesla, we have AMD, NVIDIA, we can keep an eye out for as well off our previous day highs 196. For some other tickers, recently we had a Microsoft earnings, so we'll keep an eye on potential earnings play, right? Dip and rip for a push towards the upside. Other names to keep an eye out for, a potential meta break underneath that 520. Similar thesis, you like to see a pop and fade, IV to cool off for a continuation lower. So keep an eye out on Microsoft and Meta after earnings. One, Microsoft towards the upside, Meta towards the downside. And then for a few other tickers coming to market open, SpaceX above our previous day highs is in play. And then the rest of the semiconductors, right? These ones have been beaten down quite a bit. We can see a potential mini bounce coming to market open if we can get above our previous day highs. That's going to be key. Until we can get above our previous day highs, we're going to still maintain a short bias coming to market open. But if we can get above, you can see this flip back towards the upside here on a couple tickers. So main watches today, let's keep an eye out on AMD. Off this previous day highs, Tesla is in play here as well. Reaction off our previous day highs. And then we'll take a look at a couple other semiconductors as well. During this market, as I mentioned, don't try, if you're day trading, right, don't try and don't have a hard bias coming to market open. Be open and playing both sides. If you are interested in looking for a couple of mini dips in the markets, right, this is a great opportunity, right? The QQQ and the SPY have pulled back into key technical levels. A lot of these names are down quite a bit here. You can see the VIX is also spiking as well, up in towards our 20 yesterday. But these are good areas for potential dip ads here on the SPY and Qs. Obviously, the SPY is not down that much. The Qs is down a little bit more. But if we're looking at a potential retracement here on the markets for the NQ, we would like to see a little bit of buyers potentially step in here off that previous all-time highs level. So that's going to be it for me today. I'm going to get ready for market open here now. Hopefully you guys did enjoy that. If you did, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below. With that being said, I'll see you guys all tomorrow. All right, take care everyone. Have a great rest of the day. Peace.